Where am I? Oh, hello, traders. Welcome to the new trading week. Ryan won't be with us this week. He's taken a bit of a holiday with his family and kids. But as you will see, I will have at least for the first part of this week, a special guest with me. I'm just waiting for him to arrive. Give me a sign that he's on so I can promote him to be panelist as well. Um, First of all, a few things to mention. This is the last week that we will have the special offer for the trader funding program. If you take an assessment, you will get a 45 minutes one-to-one session with our good friend Blake Morrow. I know some of you already had this meeting, and we're getting a lot of very good responses to it. So this is your last opportunity. Ends at the end of July, which is on Wednesday. And so take advantage of it. This is a very good opportunity. Your risk is really only your assessment fee, and all the rest of the risks are taken by the trader funding program organizers. Also, during the assessment, you will have access to our live traders room as well, which is comprised of us, of course, in the whole ForexAnalytix organizing team, but also a really good bunch of traders helping out each other. No competition in there, we are just there to help each other to make money, to make life better, to make your trading better. So no time to waste. Join this one. If you also, I'm going to put the link in our chat. There we go. For those who would be interested, you just click the link, follow the link, and everything will be explained in there. Also, this week, as usual, we will have our NFP competition, of which I'm also putting the link in our chat box here. The non-farm payrolls competition going with, again, a multitude of great prizes to win for those who are closest to the outcome, to the number, to the guesses. Just a reminder, only guesses on the original tweet will count, okay? So whoever of the team retweets, reposts those this NFP competition, do not answer to anything else than the original tweet, all right? So this is one, get your guess in there. It's free, it's absolutely, there's really great prizes. You can win access to our chat room, of course. You can also gain access to Pigsuit and also gain access to our live squawk people. So there's really no downside. Get your guesses in there, and the first three, I think, are going to run away with great prizes. All right. I am going to quickly see if my good friend has already arrived, but if not, let's just continue a bit here. Let me see. Nah, he's not there yet. All right. Who raised his hands? Somebody raised his hand. Oh, there you are. Promote to panelist. Let's see if it works. Let me know if you're in. Because for the first couple of days of the week, we are going to have there we go, our headmaster surfer of the Elliott waves with us, Greg Horvat, who is going to show us what he'll be looking at this week. We'll do a bit of a special this week, you know, since there's so much going on the central bank side, on the inflation side in Europe. We will also have the quarterly refunding announcement coming in the mix. We will have like the jobs reports coming out in the US. So there's going to be a lot to talk about. So we are going to go one day at a time and have a little look at everything that goes on. But first of all, let's run through the weekend news as we usually do, bit of a review of the data as well, and then have a look at what's to come. Really, market moving, I would say. There hasn't been an enormous lot coming out over the weekend, but we do have the unfortunate geopolitical situations not improving at all, especially not in the Middle East. I'm not going to go into the details, but it's still ongoing there between Israel, Lebanon now, and others. That is something that is going to keep the markets on their toes in general, you know, and I think it has, barring perhaps a bit of lower yields, and so it probably has to do a bit with the gold revival, with perhaps silver as well rebounding a bit. Is that underlying geopolitical stress that is still ongoing? And by the way, it's not only over there; it's still going on in Ukraine as well. And some of the European politicians finding it funny to go behind the EU's back and trying to mend relationships with China, for instance, where the Italian PM Meloni is chatting to Xi, trying to see what's possible over there. But I'm not sure that she has the full support of the European Commission to go there, as we've seen as well with Orban, the Hungarian Prime Minister, talking to Putin. That wasn't really taken very nicely. So we'll have to see how all those geopolitics are turning out. But it's still ongoing, and we can't really forget what's going on there. Just give me 1 second. I need to do something here. Okay. All right, just covering a couple of things. Okay, elsewhere. China, PBOC fixed 713.16, so keeping the fixing above 713. They're still showing their will after their multiple rate cuts to keep, let's say, keep the market guessing, but not going too hard against what the market is trying to do, and weighing a bit on the Chinese yuan again after those last week's moves. Get me out of everything yen related, and which dragged also dollar China lower in sympathy. We are now back to more neutral levels, and with the PBOC keeping their fixings, let's say, not extremely big, but not putting them any lower. It does seem like the market is still feeling relatively negatively biased towards the Chinese yuan. But I'll have a look at that later. In the meantime, we saw the year-to-date profits rising a little bit despite economic worries over there in China. But this is not really a big move versus the prior one. So we're used to profits which should come in higher if the Chinese economy is buzzing along. What else? On the well, two things about the US elections. First of all, we've had Trump come out supporting and giving like really a lot of support to the cryptocurrency sphere, saying that the US should hold all the crypto that it has up to now, and even build on it. He's going to try and beef up that side of that side of the equation now. While on the other side, Kamala really seems to get now the support of all the heavyweights of the Democrat side. So it does look as if the election where if it would have been Biden-Trump, would have been very, how shall I say, imbalanced, according to the polls. But it does look like Kamala Harris is kind of succeeding to get more support. So that is somewhere important for the markets, because if we have since we've seen those several legs of the Trump 2.0 trade coming into the market, it may be that the market needs to hold back a little bit on trading those right now, perhaps barring those cryptocurrencies, because the Bitcoin crowd will probably love what Trump is saying. And since he still has a bit of advantage in the polls, it may help. Well, it is actually helping right now the cryptocurrency. So keep an eye on that one. But to really trade the 2.0 Trump election, perhaps the market needs to rethink a little bit of that right now and put it in the fridge and see if they need to take it out of the fridge a little bit later. What else? Yeah, and we have to, and I'm coming straight to the Europe now, and there's been some articles out where the European Union is now preparing a potential second Trump election, and they've already started to plan now against possible tariff hikes that Trump is threatening with. They are preparing a two-step plan, and one of those steps would be to increase massively duties on some US products as well. So while they are saying that they don't want a trade war anymore, they are already now preparing where they weren't prepared at all for the first round of the Trump election. They are now really starting to prepare any possibility that the US would hike tariffs on EU products. They are now really planning for it. So that's one to keep an eye on as well. Not for now, but just know that the EU won't be as surprised as it was the first time around. Coming over to the UK, ahead of later this week, the Bank of England, we are having the Chancellor Reeves talking today, and I think this afternoon she's talking in Parliament. They've already been, of course, sending all those messages and into the air and the markets about the gaping hole that the Tories left, and that there is no money in the coffers. So she's talking this afternoon. She should announce a autumn budget date. She probably won't go as far as talking of specifics on tax hikes, but be a bit careful on what she may say. And I think we've already seen a little bit of it happening this morning in the market, and that's what I was talking to Ryan about last Friday as well. Is the market now starting to turn a little bit, and more looking at the risks for sterling in case Reeves should have to announce tax hikes going into later this week, the Bank of England, which will be really a limit border case. The closer we get to the Bank of England meeting, even though we have seen the GDP doing better, so there is still a very solid case of them staying on hold. But the market is more and more taking into account the possibility of a rate cut this week. Okay, that will be on the 1st. We have seen this morning the UK yields coming down. All yields are a bit lower, but the UK yields really got a little bit of a slap this morning, and the cut probabilities for the Bank of England have been increased. So that is also weighing on the sterling right now. Okay, let's see what those data brought us at the end of last week. First of all, those PCE data. Lukewarm report, sticky on the core. We did see a bit of mixed bag on the outcome, and we've seen on the back of it the dollar market did not really know what to do with it at first. Bought, sold dollars, and but still we are after that GDP number, we didn't really see a very big increase here either. So it does seem that after a while, the personal income undershooting a little bit, spending still being okay-ish. but the market came back to the middle ground. We had the final Michigan numbers as well, staying where the expectations were before. The one-year inflation dipping just slightly, and we've seen again this communicating vases effect when the short-term inflation come down a little bit. The expectations here come out a little bit better than expected, albeit we are at a bit lower levels than we were before. So the consumer is telling us that we have to be a bit careful, and that is likely what afterwards, in the balance of everything, may have weighed a little bit on the US yields as well. Atlanta Fed GDP now, they are revising every 5 minutes, so moving on that one. Okay. Now, I am usually not trading nor watching too closely those CFTC position reports, but we have to note a couple of things here that the market is looking at now, whether it be only the retail market. Okay, I haven't seen huge articles or panic or whatever moves on the back of those CFTC positions, but we have to note a couple of them. Okay, so the one here is a big screw back, and this is the reporting for the 23rd of July. Okay, so that was before we had the Wednesday, Thursday dump in all things yen. Already then, the speculative market has been screwing back on short yen positions. That, I think, is due to what I call these guerrilla interventions that we saw from the MOF, the nearing of the Bank of Japan meeting, which we will have on Tuesday early morning for us. Sorry, Wednesday early morning for us here in Europe, Tuesday evening for our friends in over the on the other side of the pond. And I suggest that these positions, looking at the violence of the move that we had on Wednesday, Thursday, have already been screwed back even more and dramatically more. I think going into the Bank of Japan, we will do a special on the yen tomorrow, but just to mention this, I think going into the Bank of Japan this week, positions will be a lot lighter because we don't know exactly what the Bank of Japan is going to do, whether they will really push the pedal and go very, very hawkish and do stuff that, like, for instance, half the bond buying and do a 15 BPs minimum rate hike that would be sending very strong signals. So I think the market is now traveling extremely light on the yen positions. And the other one that we've seen, and that will probably not have changed much after the Bank of Canada perhaps even increased, are the increased Canadian dollar short positions. All right, I'm going to show the dollar CAD in a little bit. We are trading at relatively important level here, and that is an interesting one to watch. This increase in the Canadian positions, which may in turn slow down a bit the move that we are seeing on the downside in the Canadian dollar. Moving over to today, bit of Swedish GDP data, seeing a bit of a rebound after a negative revision that we had, the last one as well. Don't know if many people are trading the Swedish krona. I'm not really trading it a lot right now. We also had the Bank of England consumer credit data out. Moving on, I would say money supply staying pretty much in line. Rose a little bit. This is also, if you throw more money into the markets, it does tend to weigh a little bit on yields and perhaps on the currency. We've seen mortgage approvals dipping back down below the 60K mark, but the net lending to individuals in the in the net lending numbers rising. So that may put a little bit of I don't know, alert, I wouldn't say, but a bit of monitoring need to be done here in those lending data. We'll have this CBI distributed trade survey coming out. This is usually a negative number in the UK. Those are very miserable people. So we will have this out in 10 minutes. Don't be surprised if it's a negative one again. For the rest of the day, very, very quiet. Overall, this week, as I said, we have a very light treasury auction schedule. The quarterly refunding announcement is expected for Wednesday. Really, from tomorrow on, for the rest of the week, it's going to be an avalanche of data, central bank meetings, announcements. So it's going to be a very, very, very heavy week. So prepare for any eventuality this week, because it's probably going to move quite hard. And as you say, Bran, in the mix of it all, we're having end of month for the first 3 days. By the way, and while you're talking about the end of month, today we are trading value date end of month. So we will see this afternoon if there is any need for the US corporates to go to do a bit of dollar shopping. Perhaps the market has already anticipated a little bit of it, or this may be European asset managers needing to rebalance a little bit during our European mornings, which we have seen as well in prior months, this kind of scenario. For the rest, CPI data tomorrow out of Europe. The July numbers coming out, that's going to be carefully watched. Especially, I say these German data, because seeing the dire state of the German economy still, I think this could be a bit of a mover pre all the rest. We will have also the Q2 European GDP coming out. We know that the GDP in Europe is still very, very moderate, but we will look, as Lagarde was trying to hint at, we will look at any revival here of the EU GDP, and that may be then telling us what the euro dollar may do going into Wednesday as well, like prepare the bias for the euro dollar going into Wednesday's FOMC. And then from tomorrow afternoon, we have some housing data and the first leg of our job week in the US. So the jobs openings last month, I mean to recall, we did not move that much on the jolts. I may be mistaken, but I don't recall that being having been a big mover last month. I think ADP was actually a bit of a bigger mover than the jolts. But we do have also the consumer confidence here, okay? And we know that is something that the FOMC is watching at. We are expecting it to dip below 100. So keep an eye on if this would be if this would already be worse or so than expected. It may also put us with a little bit of a bias going into the FOMC, which I think is going to be status quo, but preparing us for September. That is my just main feeling for what we could have on the FOMC. And then we are going into Aussie CPI on Wednesday, the big expected Bank of Japan meeting, and then later in the day, more European CPI data, and of course the FOMC meeting, okay, together with the ADP, right? So that's for Wednesday. Thursday, we could have the next big mover of the week. I think it will move, and that's going to be the sterling. We will have the Bank of England meeting, okay? So that one is also going to be watched, because it is, even though expected to be potentially a cut, it may be tighter than what the 6.3 is showing us here. So expect sterling to be on the move on Thursday, and then of course cherry on the week's pi is going to be the NFP, the US labor report on Friday. All right, so today not a lot more happening, but we are trading value date end of month, so take it into account if you trade anything. And then for the rest of the week, it's going to really heat up. All right. I'm looking at the clock. Gregor, if you're around, I'm going to take another literally 2 minutes and you are taking over from there, okay?
Yeah, sure. I'm here.
Okie dokie. Welcome, by the way, Gregor. Good to have you with me for the first part of this week. Whoa, what's going on here? So just in general, a little bit. As you can see, we're still in this triangle on the euro dollar. I don't expect it to move anywhere outside unless we get like big surprises on those EU CPI data, perhaps ahead of the FOMC. And even on the FOMC, since this is a preparation meeting for September, I mean, it's globally expected that this is a preparation meeting for September. I'd actually be surprised if we move outside of the triangle before we see the US jobs report. Okay. This is how I'll be looking at it. I'm just a little short because of the value date end of month today, but I've already managed quite a bit of it, so I'm stress-free right now on this one. But whatever happens this week, I think 109.60.80, 106.80.60. That's really your zone where you will need to pay attention for what's going to go on in the euro dollar. I think one that is in a bit in danger, globally speaking, but we will do a sterling special as well ahead of the Bank of England. But globally speaking, this short term at least, it's not looking great, and we are trading around this 138 and a quarter, where I said this may be an important level, and we are already on it. We know that the sterling market can be a bit emotional. It's looking a bit fragile. And unless we get Reeves managing to turn this around and we could get back up to 128.80, for instance, I would say that for the day at least, we may see a bit of rally sellers somewhere 128.5 up to 128.50, 65. So that's a bit how I look at it right now. And then finally, and I'm going to go back on this monthly because this is, let me just get rid of this. As I've been mentioning a good few times, you look left upper side there, 200 simple moving average on the monthly, 84.48.5. And we do have a bit of optionality activity as well this week around this 84.5. But I think going into the end of the month, take the 1st of September as well with it. It's going to be an important one because this is the whole Brexit shenanigans. And since Brexit, we have retested it once, but never closed below, okay? So keep an eye on what's happening at the end of the month in the euro sterling. This may, of course, we will have the 85 zone, which broken, which will be important. But I'd say start September, look at what the Bank of England is doing. This may already be important enough, this 84.5 level, okay? And with that, I'm going to shut up for the rest of this session and give the parole to Mr. Gregor. Welcome, Gregor.
Hey, welcome. Okay.
Show us what you've got.
Yeah. Can you see the charts? Yes.
Yeah, we see it.
Okay. So I think that we are here on when looking at VIX. Firstly, I think that it's showing us that stocks are obviously in corrective pullback. And I just think that this corrective pullback on the S&P 500 it still has a lot of room to the downside. I just think that if someone maybe thought that after very strong moves here through May and June, that markets will just continue straight to the upside for the rest of the year, well, especially ahead of elections and during summer in particular, we will normally see a slowdown. So I think that we are here just in first part of this deeper correction. And what I really like so far is that when you look here at this seasonality chart, okay, we obviously plenty of times we have topped out after very strong moves here in the first part of the year. We topped out in July, and so far this is playing out very nicely. In fact, we have quite strong impulsive drop here. So I think that this correction could actually last till end of the summer, maybe September, October. We could see some, again, new interesting support. I still think that if the Fed will potentially cut rates, then maybe it will do it around the elections period, and that's obviously the perfect time for everything to look nice and to support the markets, especially if we would see some very interesting pullbacks here on stocks. Now, when it comes to the Elliott wave principle, then of course, whenever we see a completed 5-wave rise, the market will normally reverse in 3 waves. So I see this as a first leg, which obviously is at the first support here. So maybe some stabilization in the near term or for this week because of plenty of data is definitely possible, if not probable. But then I would be looking for another sell-off during the month of August. Also, if we take a look maybe on technology sector, which seems to be in a much sharper and clearer impulsive sell-off, you can clearly see here that where I have the basic chart of structure of the Elliott wave principle. So earlier I said 5 waves up and then market will pause down for a 3-wave ABC correction. So we are still, if you're looking at the red line, we are still missing this part of this correction to accomplish. So obviously we could see some stabilization, as I said, but especially around this 9,000 figure. But maybe if we broke this one, then Paul could resume even already at the start of this week. But I still think that sometime this week we will see some relief rally that will be much higher or bigger than the recent one.
Gregor,
yeah.
Do you think, and well, it's actually, I'm going to ask you, do you think, but I mean, my impression is that, so last week, or the last week and a half, we had this kind of move of get me out of everything and which may really have been triggered by people getting out of a lot of yen positions, which were hedged with other stuff. Do you think that the Bank of Japan is going to have a big impact on the on equities because of the reaction function to what it had versus this big washout in all yen things?
Yeah, I mean, I was looking at the dollar yen. If you look just real quick here, to load my charts.
Because I think you had a very nice overlay dollar yen with an equity market, right?
Yeah, here it is. Actually, it's the Nikkei. Yeah. And you can see that there was actually, I mean, it was the same timing of this reversal. So I just think that obviously there was a lot of positions liquidated, a lot of exits in Japan, and obviously they are looking to go into cash in Japanese yen. And I just think that this correction is definitely not over yet. Of course, there can be maybe some rally, as I said, 40,000 maybe on Nikkei, but eventually this will trigger more weakness. But rather than dollar yen, maybe if stocks in general are headed to the downside, then obviously yen crosses are going to experience much more downside.
Yeah, well, the Nikkei correlation is quite obvious, but the one where perhaps not everybody is thinking about is if you overlay the dollar yen in the S&P, it's actually not too far either, and I think that's where those cross correlations come into play as well, you know, as well as because if you look at dollar yen, did a top after, but then if you look at how the global correlation has been, it's been quite strong, right?
Yeah. So yeah, and if I have to say about yen, I don't believe that dollar yen will revisit these levels. So if we connect the correlations, as I said, then it will be very hard even for stocks maybe to recover, especially technology sector, which to me it feels like a much weaker. than maybe some of other sectors. So I definitely think that maybe Japan, what it has done, I doubt that they will try to reverse this trend. They are probably very satisfied with current Japanese yen, and they will most likely do everything what's needed to keep this Japanese yen alive and strong. So I think that dollar yen obviously is headed much more downside, but as I said earlier, that maybe yen crosses are much better to look at in these correlations, because we also obviously see euro dollar coming to the downside. You talked about euro dollar earlier. You said that you doubt that we will see any kind of a breakout of this triangle, if I'm not mistaken. Now, when looking at this price action, obviously we are actually we didn't go anywhere for the last year and a half. We are just making some very big swings around, and actually we are just at this triangle pivot level, which not only that can be connected back to this August of last year, but even further to start of 2023. So I just think that we will keep chopping around, but maybe in the rest of the summer we could continue to the downside here, maybe even retest the lower side of the range. Because again, if I maybe try to touch the Elliott wave basics here, now triangles normally are structured by 5 flags, A, B, C, D, and E. And I'm now tracking wave E, which obviously is still incomplete. What I really like so far is that dollar obviously is already strong especially against commodity currencies. But when you look at the dollar index here, maybe closer look, it looks like that it's still consolidating here. Maybe even some head and shoulders bottom formation trying to build here. So I'm looking for dollar index to rally towards 104.80, maybe even 105 for this week. But then maybe we already see a push to the upside in the next 24 hours. I would not trust this move. We have plenty of data that could easily reverse the Monday flows. So I would be very careful, but at least in the near term, I just think that there is more upside potential when looking at dollars, and especially when considering what the S&P 500 is doing. But yields so far are also coming to the downside. But I think that it's more for the dollar story, it's more because of a risk off rather than link between dollar and the yields at the moment, since stocks turn to the downside. So I'm looking here for more maybe near-term strength on the dollar index. At the same time, euro dollar, I would be watching for 108 to be a potential support. If we look here, there seems to be that we had some very interesting volumes as well here back around to 108. This was 2 weeks back or so. So maybe in the short term, we can trigger this weakness, but then as I said, I usually don't trust Monday flows too much. I'm aware of it, but think that Tuesday, Wednesday, they can be reversed. So this 108, I think it can be quite important support for the euro. Now, if we look at gold, I'm not sure, Kemen, if you have any data that China resumed buying gold after pause in May.
But I know, but as I said, from the start of July, I just had, for the first 2 weeks at least, I had a very strong suspicion that they were, because we had like several Asian sessions where we opened, where we went up like $10 regularly on each session. So I'm not sure over the past week or so, because I wasn't around, but for sure, I don't think they bought after we've done the top, but I'm really strong suspicion that the first half of July they were on the case again.
Yeah, I just don't doubt that they will have a very long pause. Sooner or later they will stop. They will start to resume buying. But I think that, of course, if stocks are in a pullback mode, if dollar is going to stay sideways or even recover, then maybe even gold, it would be safer to look for new entries like 2,300. That should be like a very, very strong, very good support. Now, still, it can be we are far away from there. There can be a lot of choppiness into this area. But when looking at the 4-hour time frame, I just think that that's definitely at least temporary top. And as I said earlier, whenever we have a top in place, the market should reverse in 3 legs. And so far, that's only 1 leg to the downside with 5 subways with wave A. So I'm looking for 2430 to be a very important resistance. We've also been trading around this level quite closely here in April, in May. We even failed to break here to new highs in July. So I certainly think that that's a very, very important region up here, and would be looking for maybe even to sell some on the short-term basis to catch some downside here for a wave C. But very big support for this year, still going to be around this level, in my opinion.
Yeah,
So
I agree on that.
so
I agree
sure.
on that. This is well, I'm not really selling it, but I'm if I see 2300 again, I'm going to be tempted. As I've already been saying in the room as well. If I mean, let's see what happens over this week. This week could be interesting. But if we are in this global yield environment slipping, and together with what's happening on the geopolitical side, I still think that gold will be something to potentially have for even the rest of the second half of the year. But it's going to be, timing will be as important as the levels, I think.
Yeah, and I just assume that there were a lot of inflows, a lot of rush into those longs, especially
Yeah.
when we broke to new highs, and now again weekends had to be cleared from the market for market to easier to continue higher, unfortunately.
Okay.
Okay, so that's actually it
Yeah.
for me. I will prepare some more charts also for tomorrow. So
Yeah. So tomorrow, yeah, as I said, tomorrow we'll do a bit of a yen special. I'll show a few things. We'll talk about what you have as well, Gregor. In the
yeah,
meantime, thanks already for being with me today. I'm sure that all our attendees, whether it be live here or on YouTube or later on the when it will be produced on the rest of the media, will be very happy with you being around as well. Thanks a lot. Thanks everybody for following us on this Monday morning, the start of a very, very active week. And we see each other tomorrow. Thank you.
bye bye.